if you picked up the Los Angeles Times today, on the front page there is this story, this headline, "Mortgage Regulator Holds to Principal on Cutting Principal." It's a story about Edward DeMarco. And last Sunday in the New York Times, Gretchen Morgenson was also interested in Edward DeMarco. "A Bailout by Another Name" is the headline on her column, and her first sentence, as she joins us this morning, in that was, "Ed DeMarco is a marked man." So, Gretchen Morgenson, who is Ed DeMarco? Why all the interest, and why is he a marked man?
Well, Ed DeMarco has the, some would say, misfortune of being the acting director of the Federal Housing Finance Agency, which is the oversight regulator of Fannie Mae and Freddie Mac. That also makes him, Susan, the conservator of both companies because, as you know, they are wards of the state. They are taxpayer-owned since Labor Day of 2008. So Mr. DeMarco has a tightrope to walk, and on the one hand, he has a duty to make sure that the taxpayer losses associated with both companies are not escalating. I mean, we're already at about $183 billion in losses at both companies, and so he has a duty to the taxpayers to minimize those losses, certainly to operate the companies or make sure they're operating so that they don't balloon even further. And then on the other hand, he has people who are interested in him and the companies helping out the housing market. Now, those two things don't jive, and so that's the problem that he has.
Well, let me share with our audience some quotes from two influential Democratic members of the House of Representatives about Ed DeMarco, starting with Barney Frank. He told The Hill, or it was reported in The Hill, this is his quote, Ed DeMarco, has been too rigid in refusing to help on foreclosures. He's acting as if he was head of two private companies called Fannie and Freddie and not taking into account the impact he has on the economy. I think he should be more cooperative with efforts to reduce foreclosures." Later, asked if DeMarco should go, Frank said yes, since he won't be more flexible, yes. And let me twin this with Elijah Cummings of Maryland, who said this, "Mr. DeMarco may be the biggest hurdle standing between our nation and the recovery of the housing market." Will you tell us more about what's going on here with these criticisms?
Okay. Again, we have been through a 5-year epic housing crisis. It is showing some signs of stability, but we are still experiencing enormous numbers of foreclosures. Housing prices continue to fall. So really what's happening here is people are trying to urge Fannie Mae and Freddie Mac to forgive principal, to allow those homeowners who carry mortgages that they have financed, that Fannie and Freddie have financed, to take the mortgage value down, to reduce the amount of the principal outstanding so as to make it easier for them to pay off the loan. Now, this is a kind of loan modification. There are many different kinds. This is called a principal write-down or principal forgiveness, but there are other loan modifications that work very well that Fannie and Freddie have been doing. So you have these two sides, one side saying, do the principal forgiveness, it will help the housing market recover and rebound, and then on the other side you have people saying, but what about the taxpayer losses that will accrue, that will be associated with those principal write-downs? So that's the battle going on here. You obviously have people who are, everyone's interested in the housing market coming back. But you do have to balance that and consider the taxpayer losses that would be associated with this program, and that's what Mr. DeMarco is trying to do.
I want to stay with Barney Frank for just a minute because I have also an exchange on videotape between Congressman Frank and Mr. DeMarco that is helps to set the disagreement between the two men. Let's listen into that.
One of the questions was, and the goal, of course, of the conservatorship was to stop the bleeding to a great extent and to try to preserve some function in the housing market without the losses that had preceded it. Has that essentially worked? I know we don't want to keep the conservatorship ad infinitum, and you don't want to be sentenced to a lifetime as the conservative. I appreciate that.
That's correct.
Has that essentially worked out when you say it's appropriate?
Mr. Frank, I believe it has. I believe we've brought the stability to the marketplace so that mortgage finances continue to operate fairly effectively during the duration of this conservatorship.
Gretchen Morgenson, in your piece, you describe Barney Frank as the Massachusetts Democrat who supported Fannie Mae almost to its collapse. So tell us a little bit more about where he's coming from.
Well, Susan, what's interesting about these criticisms of Mr. DeMarco and what he's trying to do here in protecting the taxpayers, what's interesting about them is that they are very similar to the criticisms that were lodged at the same regulator. It was a different name at the time when Fannie and Freddie were in full bloom, when they were operating, you know, as private companies with shareholders to satisfy. The criticism lodged at the regulator back then was anytime it would try to rein the companies in, anytime it would try to investigate what was going on at the companies, these critics would also come out and say, you know, castigate the regulator, then known as OFAO. So to me, it is a very interesting kind of return to the same tactic of really trying to criticize a person who's, you know, an entity that's trying to do their job, you know, live up to their duty, similarly to the way these same critics went after the regulator when it was trying to rein the companies in. Now, the regulator in that period was effectively neutralized by these critics and by the companies themselves. And so that is one of the reasons we are looking at $183 billion in losses, because that regulator was neutralized. I find that kind of back to the old way of doing things very interesting.
We are going to open up our phone lines. You can also tweet and email us. And our discussion is on Fannie and Freddie and their role in the housing recovery. And specifically, if you've been following the pressure from Washington, from some groups in Washington, for Fannie and Freddie to actually write down some of the loans, the bad loans, and Mr. DeMarco's stand against that. That's the focus of our discussion. But the larger, of course, is the housing market and Fannie and Freddie's particular role in that. Let me ask you, you specifically say in your reporting on this that if, in fact, Mr. DeMarco does what his critics want, which is to write down principal, that would be a boon and a taxpayer gift to the banks. Explain how that would work.
Yes. Okay. This is an interesting piece of the puzzle that you don't really hear from the critics of Mr. DeMarco. Susan, it's a little bit complicated, but here's the basic facts. Many of the loans that Fannie and Freddie either financed or guaranteed have second liens or home equity lines of credit on top of the first lien. Fannie and Freddie have the first, somebody else has the second, typically a major bank. These were those loans that allowed borrowers to get to 100% down payment, you know, where they didn't have to put a nickel down, you know, so a lot of second liens out there, lots of them, $400 billion worth of them. If you write down the principal on the first and leave the second intact, that is a gift to whomever owns the second, because their loan will be more likely to be paid off. If you did a principal reduction program where both loans were written down, that's another matter. That is equality, that is fairness. But when these people talk about writing down the first lien, they're not talking about making the banks write down the seconds. And that is really where it becomes a gift to whomever owns those second liens.
Well, let's get to our discussion with viewers. The first I'm going to use is a tweet from someone who's called Florida Gordon, who asks, is anybody going to jail over the housing market scandal?
Boy, that's the $67 trillion question, Susan. My colleague Louise Story and I at the Times have written extensively about this. There really has been very little in the way of accountability for this mess. Certainly very few criminal prosecutions. I can think of just one of a major mortgage lender whose CEO went to jail. It was not a major participant in the crisis. This was a company called Taylor, Bean, and Whitaker, and its CEO has been sentenced to 30 years in prison. But it was a $3 billion fraud. It was by no means central to the mess, and so everyone is wondering why there have been so few successful criminal prosecutions. You know, a couple weeks ago, Eric Holder was up at Columbia University saying that, a lot of the behavior was amoral, improper, it was wrong, but it might not have been illegal. Well, I think that people just have a lot of skepticism, bring skepticism to this idea that a crisis this large that hurts so many people, billions in losses, millions jettisoned from their homes, that there was no criminal activity involved. Now, I am not a criminal prosecutor, so I can't make the definitive answer about why, but I do understand the suspicion and the frustration, because you do know that if no one's held accountable, then this kind of an episode is very likely to happen again.
Our guest is the assistant business and financial editor. She's been writing about financial markets for the New York Times since May of 1998, and her column can be read in the Sunday edition of the paper. You also referenced your reporting specifically on the housing market, and I will recommend to people one of the products of that reporting, a book that is still available to people interested. It's called Reckless Endangerment. We're taking your questions for her. Let's go to Battleground, Washington. This is Sean, who is an independent there. You're on, Sean.
Ms. Morgensen, I wanted to thank you for the very thoughtful and informative interviews that you've given with Bill Moyers over the last couple of years. I kind of want to take a step back and look at the overall situation. We have on our hands an economic catastrophe, a foreign policy catastrophe, and an ecological catastrophe. Marcy Kaptur, representative from Ohio, has called this situation a financial coup d'etat. So I'd like to know why isn't this considered a threat to national security? It seems like the American plutocracy poses a clear and present danger to the national security of the United States. I recently read a book called Liar's Poker, which was by Michael Lewis back in '89, and he was there at the very beginning of the collateralized mortgage products. And what he captures in that book is a culture on Wall Street that is extremely predatory. Like, I don't think people quite grasp the predatory nature of the American plutocracy. And now we have high-frequency trading with co-locating supercomputers, so that they can front run the tape microseconds before the retail investors. So just an overall kind of grand view of this thing, it seems like we need to go to some sort of World War II style command economy where we have just a complete nationalization and takeover of the entire economy to remove this plutocracy. Richard Wolff, this Marxist economist from UMass Amherst, has been very emphatic about the whole notion that we can't re-regulate the economy. The plutocracy has demonstrated over the last 30 years that re-regulating will accomplish nothing. They'll just undermine all the regulations in the future. Your comments, please.
Thanks for your call, Sean.
Well, Sean, I think that, one of the worries about so-called nationalizing, which means that you're essentially asking the government to handle all of these very complex institutions, is that the government's role was very central to this crisis. The fact that the regulators were asleep at the switch, or worse, that they had been co-opted by the very institutions that they were supposed to be policing, has led me to believe that you can't rely on these kinds of figures, these kinds of regulatory institutions to necessarily do their jobs. We had rules on the books going into this crisis that could have reined in these institutions, could have stopped some of the predatory lending that was going on, as you describe it. And nothing was done. It was really, in fact, when certain regulators tried, like the FDIC was a perfect example, when they tried to, raise capital requirements or put in place things that might protect the taxpayer from these kinds of problems, they were fought back, they were battled back by other regulators, the OCC, the Federal Reserve. It was very difficult. So I don't have a lot of confidence coming out of this mess that the regulatory framework in Washington is able to really take on these very powerful institutions. And if anything, after this mess with Dodd-Frank, the regulation that was the law that was supposed to protect us from these kinds of episodes. If anything, it seems to me the institutions have become even more powerful. The banks are larger for the most part than they were in the years leading up to the crisis. They are still too big to fail, which means they will be bailed out if there are problems. And so I just feel that we really have to have a complete rethinking of, you know, of our system, the financial system. And a first move would be to cut these banks down to a more manageable size. Very few people are willing to talk about that in Washington. There are a few, but very few.
Next, well, actually, let me go to a tweet. This viewer, Jim at the Lake, wants to hear more about your principal write-down and the concern about the gift to the banks. He asks, does Gretchen think a principal write-down would influence a borrower to pay the second and skip out on the first?
Well, that's the problem with any kind of a principal write-down program. It does encourage people to think about what's called a strategic default, meaning that you can afford to pay the mortgage, but you default on it anyway because there's this program out there that you know, allows a principal reduction. This is a big concern. This is a major concern for people like Ed DeMarco and for, you know, people in the administration. You don't want to have people who can afford to pay their mortgages strategically default so that they can burden the taxpayer. So here is a very interesting fact that I think speaks a lot to this point of whether Fannie Mae and Freddie Mac need to do a full-scale principal reduction program. When I was reporting out the column from last Sunday, I learned that fully 75% of the underwater loans that Fannie and Freddie hold, that means the mortgage is higher in value than the home underlying it. And we're talking about major underwater, 115% or greater loan to value, okay? 75% of those people are still paying on their mortgages. They are current on their mortgages. So that tells me they are willing to pay, able to pay, even though they're underwater. And so I think that's a very interesting statistic which indicates that perhaps this principal write-down program isn't as necessary as some of the people are saying. 75% of people with underwater mortgages are current on their loans. I think that's a very compelling number.
And talking about the fallout for banks, Moody's, the credit rating service, has announced, and there are lots of news stories. Here's one headline in the Economic Times, that it will be releasing a new rating structure for 17 global financial firms, including Morgan Stanley, Bank of America, and Citigroup. And here's a headline related to that, which is that they're preparing for possible credit downgrades coming up this spring. Next is a call from Auburn, Pennsylvania. This is Menny, who is a Republican there. Menny, hello, you are on the air. Welcome to the conversation.
Yes, hello. Thanks for taking my call. I'm obviously not as intelligent or as educated in finances as the previous callers or Twitters, but I have a problem with Barney Frank even having anything to say about the situation. Because quite frankly, I hold him and Chris Dodd and a few others responsible for the crisis. And I don't understand how they are allowed to have any say whatsoever in this area. I don't want people to be punished because they have houses they can't afford or whatever, but I know that I had to save to get my house. And I'm not talking for a few weeks. I'm talking a few years. And I don't see why anyone else should, you know, be able to purchase a house they can't afford without even putting an application in, or, you know, having proof that they have a job to pay for it. And I'm sorry, you know, I think that Barney Frank and Chris Dodd and a few others have taken this social justice belief just a little bit too far. Where's the concept of working, you know, and waiting until you have money to buy a house? I apologize, I'm a little bit nervous, but, you know, I just wanted to say this, so thank you for taking my call.
Thanks for making it. Gretchen Morgenson.
Well, I think that there are a lot of people who agree with that consensus. Mr. Frank was a housing zealot. I think he truly believed that housing for as many people as possible was a noble goal, and it might have been a noble goal, but it was perverted along the way by the predatory lending that really was so prevalent in the boom of the 2000s. And so it was maybe a goal that was worthwhile, but it went awry in a very large way. Now the taxpayers are footing the bill for those bad loans, and yet again, back to the accountability issue, no one's held accountable for this, including regulators, including members of Congress, including members of the business community who made these loans. So I understand the frustration. I certainly sympathize with the frustration. Mr. Frank has announced his retirement, so he will be leaving Congress, but it's an interesting moment, an interesting question, and again goes back to this issue of the people in Congress who were such entrenched supporters of Fannie Mae and Freddie Mac and the home ownership push that was launched by the government in the mid-90s at the highest levels. They were so integral to that push, and now they're trying to push for the write-down of principal on these mortgages, which would very likely increase the cost to the taxpayers. There's been no indication that it would not increase the cost to the taxpayers, could even encourage people to strategically default. So, I think that that's one of the more interesting paradoxes here. The same people who really helped to neutralize the regulator during the boom years are now attacking the regulator when it's trying to do its job.
A tweet from someone who calls themselves right-wing radical who writes, "There's no such thing as predatory lending. Two people voluntarily enter a contract."
Well, unfortunately, the vast majority of loans that were made to first-time home buyers, immigrants, people who'd never gone through the process before, were made to people who really did not understand these loans. They were very complex loans in many cases. They were loans that had, bells and whistles on them that really made them very complex. We're not talking about your 30-year fixed mortgage here. We're talking about mortgages that had a prepayment penalty, very significant. We're talking about mortgages where if you didn't want to pay the entire principal or interest amount, you could get away with a small amount. That way the amount of the loan would balloon instead of reduce as a typical mortgage works. These were extremely complex, very difficult for many people to understand. The people selling them had no care about what happened to the loan ultimately, because they were selling the loans to someone else. They would not be holding the bag when the loan came bad and went bad and was not repaid. So I disagree. There was a lot of predatory lending. Yes, the contracts were agreed to, but I think that the banks have a responsibility, or mortgage lenders have a responsibility, to make sure their customers understand what they're signing. This is the biggest financial transaction that many people have in their entire life. It's not something that should just be done lightly, but there was this was all a part of this big push for home ownership, and so that is my response to that tweet.
Next is a call from Kevin, watching us in Los Alamos, New Mexico. Independent, you're on.
Hi, thank you for taking my call. I agree with a lot of what's been said, but there's other things. People just talk about the big banks and the mortgage brokers, but it ultimately comes down to individuals. I had a person say, well, we'll loan you 115% of value on a home, and the reason why you can do this and not pay principal or interest is the value of the property is going to be going up. Now, they should have disclosures on people who are in those professions, just like realtors, and those individuals should be personally liable for those things that they say and do. Another part of this that people ignore is, I saw housing projects that say a unit was selling for $100,000, and that unit already built went up in price from $100,000 to $140,000 in a period of 6 months. So it's not just the big entities involved. It comes down to these builders, banks. So it has to be looked at a micro level, not at a macro level. You know, so there has to be a way to punish individuals for the decisions they made, whether it's a builder who has a 50-unit complex or a mortgage broker who says those types of things. It has to go down to that level. The other thing is, with the information technology we have in place today, permits are pulled at the local level. Why didn't they roll that information up to see all these buildings that were under construction? You know, nobody even looked at that. So could you address those?
Sure. There was absolutely, this was a mania. It was a free-for-all. It was, you know, built on a couple of failed ideas. One, that housing prices never fall, that real estate always goes up. That was the first, you know, flawed idea that really helped this bubble to balloon as it did. But, you know, again, it's, as you point out, there was a public-private partnership that was going on here, which really created this mania. You had the government essentially urging builders, insurers, banks, mortgage lenders, and regulators to join hands and promote home ownership so that we could get the rate of home ownership up from 64%, which where it was in 1995, to 70%. That's what Bill Clinton wanted when he launched the public-private partnership for home ownership. You know, so yeah, this is an enormous industrial complex. It's the housing industrial complex, if you would, and it involves many different participants, public and private. And I agree with you about the accountability. It must go from top to bottom, but really has been very, very little at both levels. There have been mortgage fraud cases brought, but at the small local level, individuals. But again, moving up the ladder, we've seen very, very little. So that would be my response to those issues. I think you're right on about the complexity, the strategic nature of this push that really involved so many participants.
I want to piece together a couple of different items here as a prelude for my next question for you. First of all, here is a comment from Mr. DeMarco reported in the Financial Times. U.S. regulator points finger over Freddie and Fannie, claims big banks shielded from losses. The paper says the U.S. regulator, that's Mr. DeMarco, has said that the state-controlled home loan financiers are being pushed to accept losses to keep big U.S. banks from writing down their holdings. And a viewer tweets us, Barney Frank, Maxine Waters, and others did beat up the regulators. Show the C-SPAN video. Now to a piece of video, not that, but Mr. DeMarco responding to critics and what his approach is before the Senate Banking Committee. Let's listen.
I take this seriously, Senator, that we have communities and families across the country that have been greatly harmed by this, and FHFA is trying very hard to be part of bringing some solutions and stability back to this, but I will do so in a disciplined way following the mandate that I believe Congress has given us.
Let me just add one more piece and then to you, Gretchen Morgenson, and that's your column where you write, answering his critics, Mr. DeMarco has agreed to approve principal reductions at Fannie and Freddie, but only when Congress passes legislation enabling it. Writing a law to force taxpayers to bail out the banks in this way, however, might anger constituents. So it's far easier for members of Congress to rail against the one supposedly intransigent man who is preventing the great American housing recovery. And you say, as the election approaches, of course, the cries are bound to become even more strident. So if you'll pick up that theme from there, please.
Yeah, you know, again, this goes back to these criticisms that are being, lodged at Ed DeMarco and FHFA. Again, he has a duty. We've been over that. He could, as he said, if Congress writes a law that says he, as conservator, can do principal reductions even if they increase taxpayer losses at the companies, he will do so. But so what I think is going on here is they're pressuring him to do so without writing such a law, because they are rightly fearful of the kinds of responses they would get from their constituents who understand that this is a discussion that we should be having, an honest dialogue about the future of housing finance in this country. And yet, instead, it's a beat up the regulator who's trying to do his job to increase the possibility of losses for the taxpayers in an election year. I think it's, pretty clear what's going on here. Why can't we have an honest dialogue about housing policy, housing finance policy in this country? It's so important. If you want to subsidize housing, which is a perfectly wonderful idea, if you do want to do that, then talk about it, have the constituents agree or disagree. If we all agree, or most of us agree, that we want to subsidize housing in this country, then put it on the balance sheet of the United States of America. Don't deliver it through some subsidy that goes through Fannie Mae and Freddie Mac to private companies so that their executives can extract some of that subsidy for themselves. And that's the way it was working in the years leading up to the conservatorship. It obviously didn't work. We're looking at $183 billion in losses. That's not the appropriate way to deliver a housing subsidy. So my concern here is that we are not having this discussion. It is absolutely central to the crisis, and yet our leaders are silent on it. Instead, they're trying to maneuver in the background so that they can push the Federal Housing Finance Agency to do principal write-downs to make some constituents happy.
Cleveland is up next. Loretta, Democrat there. Good morning.
Oh, good morning. How are you this day?
Great. Thanks for your call. We can. Mm-hmm.
Okay. Ms. Morganson, I'm wondering about the law or the pledge called Truth in Lending, and I'm wondering why this law has not been used to arrest the banksters who violated it. And the reason why I say that it has been violated is because people who had good credit was put into subprime loans. And that there shows that it was all a scam. And it has decimated the black community, all minority communities across the country.
Absolutely.
Which proves that it was targeted. So what's going on with that?
Well, I think you're absolutely right. This was a law that was on the books. It is what I was referring to earlier when I said that we did have laws that regulators could have enforced but chose not to in the mania years. Perfect example, the Truth in Lending Act. This is something where you are, as a lender, supposed to deliver to the borrower all of the facts and figures about what your mortgage is going to be like. These things were abused regularly. People were told they were getting a fixed rate loan, and then they came to the closing table and found that it was an adjustable rate that had an exploding interest rate after 3 years or so. So yes, perfect example of the kinds of regulations that we had in place that have not been enforced. And this is again part of the regulatory failure that is so central and so much a part of this crisis. I agree 100%. And as far as the difficulties and the decimation, as you describe it, of the minority communities, this is one of the major paradoxes of this crisis, in my view, because these were the people that we were trying to help, the government wanted to help become homeowners. And how is it that after this push for home ownership, how is it that they're the ones who have been hurt so much and so badly by this crisis? I think that's something that the government should really examine and do some soul searching about. It's very disturbing.
North Plainfield, New Jersey, for Gretchen Morganson, this is John.
Yes, how are you?
Good morning.
Quickly,
Good.
What you're saying here makes some sense, but the bottom line is this. The politicians were in bed with Fannie and Freddie Mac, specifically Mr. Frank and a couple of the others that were involved specifically with the program, are now trying to demonize the people that they were telling to make the loans. The problem with going forward with any type of prosecution is, the fact of the matter is if you look at where it actually came from, it's the politicians that were pushing the company, Fannie Mae and Freddie Mac, to make those loans. Those are the ones that should be held criminally liable, as well as everyone from the top down. There will never be a prosecution because they're the ones that caused the problem. It's our government. It has nothing to do with it. There's so many tentacles, it's ridiculous. And I appreciate your time.
Well, I think that that's one of the elements involved. I would agree with that, and I know that your point of view is mirrored, reflected everywhere across the nation, because I hear from a lot of people in my email box or letters, phone messages saying the exact same thing, that the reason we haven't seen investigations is because some of the very powerful characters who were involved in this lead up to the crisis would not want to investigate themselves, essentially. Again, this is, I think, leading to a real undermining of the trust that we have in this country, to our leading institutions, to our government leaders. I think it is very difficult to come out from that mistrust once you have gone down that road. Very difficult to earn trust back. But yeah, there is this sense across the land that the reason we're not seeing more prosecutions is because of the nature of the involvement by people at the very highest levels, both in government and in the private sector. It was a joint effort, to be sure.
And Jim Hines asked you on Twitter whether he's correct in his perception that Dodd-Frank is a complete and total joke that does nothing to fix things.
Well, Dodd-Frank, unfortunately, does nothing about some of the very, very largest issues in this crisis. It was, first of all, silent on Fannie Mae and Freddie Mac, basically just punted on that situation. Obviously a big piece of this crisis. That was the first failing. Second is that basically they don't do very little to nothing about too big to fail institutions. And you know, they have this resolution authority that will supposedly come in and resolve troubled institutions, but it really does nothing about cutting banks down to a more manageable size, about hiving off some of their activities that produce conflicts in their business models, that put their customers at peril. So it really, it didn't tackle some of the biggest issues. There is some good in the law, but one of the major problems now is that the regulators who were tasked with writing the rules to meet the requirements of Dodd-Frank are being lobbied strenuously by the financial institutions who have a distinct interest in the outcome. And so Dodd-Frank essentially delegated the rule writing to regulators, which sounds like it makes sense. They're closer to the situation. They know how to write rules that will be more effective. But it essentially gave lobbyists two bites at the apple. One during the Dodd-Frank legislative period, and secondly when the regulators are writing the rules. So it's really creating a lobbying frenzy, and a lot of these rules are being held up and not being written because of these practices.
We're going to take two quick last calls for Gretchen Morgensen. Sarasota, Florida. Dan?
Yes, good morning, and thank you for taking my call. I'd like to make two quick points. I don't feel your guess is going back far enough. I think it goes back even further than the Clinton administration, and I go back to the CRA's, Community Reinvestment Act, where community organizers were virtually putting a gun to the head of the banks to make loans. Why did they want those loans made for people to get into the homes? Because those were their voters, and they really didn't give a damn if they could afford it or not. That's point number one. The second point I want to make is that there is a massive problem growing in the legal aspect of these foreclosures, and that is when I talk to my bank, they only refer to themselves as servicers. When I talk to Fannie, they only refer to themselves investors. I consistently ask I want to speak to my mortgagee. The mortgagee being the holder of the promissory note in due course. That person will not come out from behind the curtain. And the courts are beginning to realize that the mortgagee is either unavailable or confidential, and those conditions cannot stand.
Okay, I'm going to jump in, Dan, because our time's running out. So Gretchen Morgenson first was farther back in time to the Community Reinvestment Act as the seeds of this.
Yeah, I feel like the Community Reinvestment Act was not the central thing, the central prime mover of this crisis. That was something that had been on the books for many, many years before this really ramped up. So I'm less of a proponent of the idea that CRA is completely the issue here, the germ of this problem. I think it was more about the 90s and Fannie and Freddie understanding that they could co-opt their regulator and take over, build their portfolio up, extract riches for themselves in the form of executive compensation, all the while wrapping themselves in the American flag of home ownership. Then Wall Street took over, so it's been, kind of a joint effort, I believe, all the way down the line.
Can I jump in
now,
there?
As far as
just because you've mentioned President Clinton a few times, we have a lot of people tweeting to us to say that President Bush, in fact, continued and expanded the home ownership policy.
Yes,
and
absolutely.
Here's Kay
Correct.
Wright, for example. Can we have facts? Under Clinton, only 3% of all home loans were subprime. Under Bush, 50% without regulation or oversight. Just wanted to put that on the table.
Right. Yeah, no, and that was the beginning. Clinton was the beginning. Absolutely. Bush took up the ball and ran with it, as did the Wall Street community. I'm not, obviously saying this was a bipartisan effort. Absolutely correct.
And very quick and final call. Cleveland, Paul, would you make it short, please? We're really over time here, so quick question.
Well, thank you for taking my call. The people were brainwashed into thinking that they were going to make money as the value of their houses go up. I'm 77 years old. I don't want the value of my house to go up because I have to pay more taxes. And that's what the local governments and all the governments want, more taxes, more taxes. And when I die, no matter what the value of my house is, I am not going to collect a penny. Everybody on my street that passed away did not collect a penny, regardless whether their house was worth $10 or $10 million. This is a brainwashing job, which we condemn the North Koreans of doing.
Paul, thanks. I'm going to stop you there. Closing comments, Gretchen Morgenson.
Well, there was absolutely a mania. This was a mania defined by the idea that housing prices would only go up. He is correct that older people have very little interest in seeing the prices of their homes go up unless they're going to sell them. So if you are, going to die in your property, you don't care about housing prices rising. But everyone else was in the game, very interested. It was a cocktail party chatter. You couldn't go to a party without talking about real estate prices going up. Obviously, we've learned our lessons, and I hope that we can really avoid such an incident coming down the pike again.
Gretchen Morgenson's column this week on Ed DeMarco, which was the basis for our conversation this morning about Fannie and Freddie, is still available on the New York Times website. And for more extensive reporting, we recommend that you check out her book, which we talked about earlier. Here's what it looks like: Reckless Endangerment, How Outsized Ambition, Greed, and Corruption Led to Economic Armageddon. Gretchen Morgenson joining us from our studios in New York City this morning. Thank you so much for talking to our audience.
Anytime, Susan.
We appreciate it. Well, we're going to take a break, and then our final segment this morning doesn't look at current policies, but what America was like 70 years ago. The Census Department is about to release the 1940 census numbers, giving us a view of our country, and we'll look at those as a way to see how much we've changed in the last 70 years. We'll be right back.